If you take time to consider all of these strategies and methods, you'll discover they all boil down to 7 evergreen rules of investment, made and followed by none other than multi-billionaire Warren Buffett, the Oracle of Omaha himself. Today, we'll consider the 7 golden rules you need to know to have a successful investing career. Before we get into these life-changing rules, if you like our cutting-edge investment content, curated by professionals with decades of investing experience, remember to subscribe to our channel and join in on our alerts so you never miss our new content. Number 1. Never lose money. This is the first and maybe most important of Warren Buffett's golden rules. It's so important, Mr. Buffett himself has said, rule number 1, never lose money. Rule number 2, never forget rule number 1. This doesn't mean that you should never go for something and take a loss. Everyone does. He's only saying you should spend your money wisely and not use it on unimportant wants and needs. Don't embrace a luxurious lifestyle. It'll only have you spending more and more. As rich as he is, even Mr. Buffett lives simply. He still lives in the house he bought in 1958 and doesn't really own luxurious cars. If you want to be rich and keep your wealth, you have to spend less. Number 2. Never invest in what you don't understand. Warren Buffett, more than anything, likes to do thorough research on companies before he invests, and he only invests in businesses he understands and is within his circle of competence. A good example is cryptocurrency. If you've been following Warren Buffett, you know that he constantly expresses his dislike for it since he doesn't understand it, and no matter how many millions of dollars people make from crypto, he will never invest a dime in it. In fact, he said at the Berkshire Hathaway annual meeting, "If you offered me all of the Bitcoin in the world for $25, I wouldn't take it, because I wouldn't know what to do with it." In the same way, you should always only invest in companies you're able to understand. It helps you better analyze a business and see how profitable it can be in the long term. If you don't get it, then don't buy it. Get it? Number 3. Be ready to stick to your investments for a long time. This is one of the rules that sets Warren Buffett apart from other investors. He can hold an investment for donkey years without selling. In fact, he has a 34-year-old investment in Coca-Cola that he still hasn't sold, and that has been very beneficial for him. Coca-Cola stock has been generating returns of 5,810% for Buffett and Berkshire Hathaway. In fact, in 2022, Berkshire Hathaway received $704 million in dividend income on an original investment of $1.3 billion in 1988 and 1989. This is why Warren Buffett has said, if you aren't willing to own stocks for 10 years, don't even think about owning it for 10 minutes. Money isn't made in a flash when it comes to investing. It takes time to make money. Investment isn't magic, and money doesn't grow overnight. Don't ever be in a rush or impatient, at least not when it comes to investing, because these things take time. Staying the course wins the race. Number 4. Never invest with borrowed money. One of Warren Buffett's most important advice is never to borrow money to invest when you don't have the money yourself. Investing is a risk, and a big one at that. Things are just too uncertain and unpredictable to get yourself into debt. Sometimes you might see a stock doing well and you may not have the cash to invest at the moment. While it might seem foolish to not borrow and invest, Warren Buffett thinks it's foolish to put yourself and your borrowed money at risk like that. Keep in mind that while a stock may be doing well in that moment, it can collapse within a day. Additionally, buying stock on borrowed money shifts your focus from reinvesting and holding your investments for long-term profit to repaying your debt. It's better to wait till you're financially stable to buy your stocks. There will always be stocks to buy once you're stable. Number 5. Don't follow the herd. This is one of the easiest traps young investors fall to. Young investors usually go with the crowd. They buy trending stocks and sell when everyone else is selling. According to Mr. Buffett, be fearful when others are greedy and be greedy when others are fearful. However, this doesn't mean that you should go out of your way to be different from others. What this means is that you should follow your gut. It means your own experience and reasoning is your best guide in the market. Stocks usually get inflated when many investors think highly of them, so don't follow the crowd. Instead, pick stocks with what you determine to be high intrinsic value. Number 6. Buy quality companies, not cheap companies. Warren Buffett has famously said, it's far better to buy a wonderful company at a fair price than a fair company at a wonderful price. And this is one of the founding principles of his career as an investor. Always choose quality stocks over cheap stocks, because they'll be more profitable in the long term. When it comes to buying businesses, cheap will never beat quality. Number 7. The company is the stock. To Warren Buffett, investing in a stock means owning a piece of the business. He'll only invest in businesses that have good long-term prospects. This goes back to knowing what you're investing in and staying within your circle of competence. Find out everything you can about the company's operating history, its business franchise, its profit margins. If it's all good, then go ahead and invest. If not, invest your money elsewhere. With these 7 golden rules, you're good to go as far as investing like Warren Buffett is concerned. These are 7 rules that made Warren Buffett the most successful value investor in history. Thanks for watching. If you like our cutting-edge investment content curated by professionals with decades of investing experience, remember to like the video, subscribe to our channel, and join in on our alerts so you never miss our new content. Oh, and check out our other popular video on this screen.